And everybody, it's Tim Reazor with Revere Asset Management just before 4 o'clock here on a Wednesday night. So very quickly, stock nerds and market lovers, before you and I begin. So podcast this week, I'm telling you, there is a little known 401k program that you may have access to that could absolutely positively maximize your 401k. Please give this a listen. This was actually a really, don't let the boring title fool you. This was a pretty heated debate in the on the show and in the office about this program. So I hope you give it a listen. If you don't want to do the whole thing, just listen to the first half, because if you have access to a 401k, there's a chance that you might have access to this program and you can do more than you ever thought possible inside of your 401k. So please do give that a go. And then listen, any questions, concerns, comments, take umbrage with anything I'm saying, like to do, I'm right here, timrevereasset.com. Have any questions for the portfolio team now? Merle is not on the portfolio team, but she is awesome nonetheless. But any questions for Hunter, Alex, or Don, the stocks that they're picking for the portfolio, how they're getting to that conclusion, what moves they're making, why they're making it. Look, we're the only shop in the free world in China that gives you access to people actually making decisions and executing. If you go to stripmalladvisor.com, you go to youradvisor.com, you're going to get plausible deniability, where they've got you in a bunch of mutual funds. You're never going to talk to the person running the mutual fund. You're going to talk to the person who is an asset gatherer or just a relationship manager. And it's going to give you no satisfaction to actually understand that the person that you're working with actually understands what's going on in the markets. And so that's what separates us from every shop in the free world. We don't nickel and dime you. You want to talk to America's fiduciary right here, Dave Stewart. Want to understand why insurance is not an investment. If you've been sold that like your life insurance policy is an investment, it is not, and that's actually illegal. We should talk about that one day. Call Danny, 855-732-5932. We'd absolutely positively love to talk to you, but we give you complete access, no salespeople, and that's what really separates us. Is one of the things that differentiates us, and I think it's really important that you understand that. And so, look, you can email me. I like Twitter, at TJ Reazor is how you get a hold of me. I like Twitter because of its brevity. So look, you don't have to follow me. My DMs are open. Just email. If you DM me, it's like we're texting buddies, and I will get right back to you. I talk to stock nerds and market lovers all the time through my DMs, and I'm grateful for the opportunity to do so, because you taking your time to watch these videos every week absolutely positively means the world to me. So let's talk. If you have questions, don't ever sit there and just wonder. And then look, have any questions or comments, you take the umbrage with what I'm saying, just call, right? But understand that these videos are for edification purposes only. They're never ever to be misconstrued advice. Want advice, need advice, take advice. All you have to do is, in fact, give us a call. So real quick, one thing before we get to the charts, and we're gonna do this video in 3 parts here. I'll tell you about that in a second. The 2021 IPO list is growing. Now, this is from a site called stockanalysis.com. 653 IPOs in the stock market this year. Look, that sounds high to me. That sounds high to you. I know it. We do a little more work, but this is pretty interesting right here, because what comes public tomorrow? Robinhood, right? Not Restoration Hardware, but Robinhood. So Robinhood comes public tomorrow. That is one of the more anticipated offerings. I think 35% of the offerings going to Robinhood members, meaning people who actually do business with Robinhood. So that's interesting as well. Giving people access to the IPO market is absolutely a good thing, because it's almost always pay to play. And so, but that is another discussion for another time. So let's do this. We're going to talk about 3 topics tonight. We're talking about some Fib work. Okay, so Fibonacci work, because I think it can really enhance what you're doing already. We're talking about expected moves, and I want to talk about how you can stay on the right side of earnings and your expectations, and then direction of the market and TNX. Okay, so 3 parts to this video. So real quick, I want you to look at this. This is a bullish chart of S&Ps, right? We're on a daily chart. Don't misconstrue here. I don't think this is a bearish chart. But I was in the office with Danny, and we were having a discussion about markets, just talking stocks and stuff like we will. And this is a couple Fridays ago. And so this is just the Fib Retracement tool from Thinkorswim. And so it was kind of that overnight high there at that point to that very, very recent low in that little time frame. And so I've given the ad nauseum why I do hourly charts. If you have any questions, just shoot me an email or find me on Twitter. I'll go into it if you haven't heard it before. When the markets shift, I shift to hourlies. And so what's interesting to me is how I use Fib, and because somebody asked the question, like, why Fib? And it's like, well, they're cattle fences, right? And so the cows, all they do is they go to the fence And does the fence stop them? And if the fence doesn't stop them, they're going to the next fence. And the fence doesn't stop them, you know, they find support at the old fence, they're going to the next fence. And if that fence doesn't stop them, they're going to the next fence. And so that's really important for me to understand. And I think it's really important for you to understand, because it can keep you on the right side of the trade. And so, well, I use on fib levels 50%, 618, 786. I know that's hard to see. 1272, and all the way up the top there is 11618. And so if you get past the 50% retracement, yeah, you're going to the 618. If you get past that, or the 618 holds, you retest 786. And it's a process. This is a couple Fridays ago that all this took place, right? So here's one Friday, right? Here's one Friday. Here's just the recent Friday, and now here's where we're at on Wednesday. So it doesn't just happen overnight. And so you want to see the progression, because if you're sitting there with bated breath waiting for this entire market to fall apart, and you see that you're pushing through these levels, well, okay, well, where could you reasonably expect the move to terminate? 1272. That's typically the target. And so make it through the 786, you're probably going to 1272. Again, it's a market, anything can happen, but you don't have to use this for precision. You have to use it for what I described it as: fences herding cattle. And so this was the fence that kind of slowed down the march of the cattle. And so you haven't been able to get through this. Now, where we go from here, I don't know, right? So after tomorrow, the big earnings are over for the most part. And so, you know, we could have a debate. If the stocks aren't going to move off these earnings, what's going to move them? What's left to buy? All that other good stuff. We can have the discussion on the podcast or another video. And so I think, though, that when you look at the markets like this, it keeps you kind of rooted in a little bit of realism. And so here's NQ. And so now NQ, though, strong, right? It broke through the 1272. Same thing, right? Here's 50. Here's the excuse me, the little high from that Friday down to that low, gets through the 50, gets through the 618, gets through the 786, all the way up here to the 1272. Tim, you told me they terminated. Well, for a little bit, and then shot right up to the 1618. Can't get through there, and now you're at the 1272 again. And so if that doesn't hold, if that weren't to hold, what do you think? Do I think is going to happen? Okay, let's come back. Let's look at this 786. Yeah, we already tested it once yesterday. You think we could test it again? Yeah, probably. And then if we don't hold that, these levels, and look, it's algorithmic, and that's what you have to understand. There's no humans going. Very few humans, I mean, are sitting here going, oh yes, we broke through the 786, and now we're going to the 1272. You know, as I make the cattle sound, they're not doing that. It's algorithmically driven, okay? And these are just, there's a reason why these levels serve as fences and points in time, and it's because of the algorithm. So we'll get it off the hourly charts here. Let's look at the Dow real quick. So Dow, yeah, these are just bullish charts, right? Are we going to pause here? Well, throw it on an ATR. Is this where we paused before? Let me take it out a little bit. Yeah, we're up. You're not even at the second ATR, but you can see this first ATR has served as kind of resistance, right? It's been a while since you got back in May is kind of the last time you got beyond the first and second ATR. Right now, Dow does not get beyond the first ATR. So do I think it can come back here? Well, that's what it looks like. Is that going to happen? Don't know. I'm not Cleo. I'm a market realist, and so all I can do is talk in probabilities. Oops, I'm gonna do RTY because this is interesting here. So let's get RTY going on the normal chart that you're used to looking at here. Let me take it out a little bit. This is a bearish pattern, and so RTY got rejected here at the mean, and so rejected at 34. So now you're rejected at the mean, rejected at the mean, rejected again at the mean, and so rejected at the mean, rejected at the mean. And so what do you think the path of least resistance is? And so I've done this trick before with you, but I like to, repetition sometimes is the pathway to success. And so that's why you practice plays, right? Whether you're playing basketball or volleyball, or there's plays for volleyball if you didn't know, football. you gotta, perfect practice makes, good results. And so I just put a minus sign in front of the ticker box here. And so there you go. You can see the minus sign right there. And so now, if I told you this XYZ stock was continuously finding support at the 21, where do you think it's probably going? Yeah, someone's coming in here and supporting this thing. You have a little 821 cross here, and then, yeah, probably up, right? If not, to retest this level to this level. But, oh, that's right, we have, my friends, a minus sign in front of it. And so the path of least resistance with the small caps is lower. And so that changes, though. You get a solid close above the 21 here. That changes it. And maybe it's working on correcting back to the upside. But if you can't start closing the deal above the 21, tomorrow's a real important day for the small caps, then I would anticipate you're going to challenge the downside again, if not. And if you take out this level from just a couple of days ago, probably going down to one of these levels over there. Okay, so those are small caps. Those are the indices. So let's talk now about some expectations. So here's, let's put in Facebook. Right, Facebook, super bullish chart. But look, Facebook had, let me show you this and how you can take advantage of this information. So Facebook's expected move is $18, okay, for the rest of the week. And so if you wanted to know the overnight move, to Wednesday into Thursday, $16.32. But I like it's easier. Not every stock has the market maker move. So it's easier to just talk to you consistently about the end of week move. So $18. And so, well, what does that mean for you? So let's take this chart. Let's put it on a 5-minute time frame. And now let's take a look at what Facebook is doing. Did I not change the time frame? There we go. Yeah, Facebook is lower. Like, how can it be lower? They love Facebook. Everybody's on Facebook. I'm on Facebook. You're on Facebook. We're all on Facebook. And look, when you take expected move and you start using what the market is pricing in, the people that control, the options market, the market makers, when you start looking at it through that prism, you don't let your expectations get out of whack. So, and we're going to do this for a number of stocks here. So look, Facebook is trading within the expected move. Went out at 373. It's trading 360. Okay. So the expected move was 18. So just round down 355, 353. So you're just trading within that expected move. And so it's probably just going to vacillate. If it starts running to the downside beyond 18, yeah, then the people that then there's probably some dislocation going to take place in the options market. But right now, what the people that sell you those elevated in price calls and puts, and that's what they are, because it's a binary event, earnings. You don't know how they're going to turn out. They're the ones that make money. It's called implied volatility crush. And if you bought a Ford Fiesta for $50,000 and it normally costs 20, the difference between 20 and 50 is what the market makers are going to take home once normalcy returns to the market, which it will in a couple of days here with Facebook, and they're going to take that premium and go home. Okay, so Facebook isn't this disaster. It's down 13 points, right? So it's well within the expected move, and so, but it is down. And so let's take this another step. So let's look at Apple today, right? And so Apple, and I was texting with the fellas yesterday, like there's some great headlines about how Apple to be this business, right? I mean, it's an amazing, amazing business. But Apple went out at 146, 147-ish yesterday. And the expected move on Apple was, what was the expected move on Apple? It was like 5 or 6. And so I believe it was like 5-ish. We're just going to write 5-ish since I'm looking at my notes and I don't see it quickly here. So it was around 5-ish and or 5 and some change. And look, Apple went out at 146, 147 yesterday, and it's down for the day. Look, oh, it went, here you go, down $1.79, right? It's just bleeding off the premium. Does that mean it's bearish for Apple? I don't know. Like when you look at this daily chart, right? What can we comprehend from this daily chart? That it fell to the 21 and found support, right? That's That is, so the path of least resistance is still what? Yeah, higher. So we look at the average true range. What do we know? Yeah, that one hit 150 before earnings. You know, even though it ran the rails, that there's a really good chance that it's going to correct at any moment. And it did here back on 7/19. So, you know, earnings are this binary event. Now, has the wind been let out of the balloon a little bit? I don't know. So my thought is that if the market starts to pull back, yeah, Apple's probably going to be in that group, and so will Facebook. Facebook's down what, 3.5%, 4%. So yeah, like those are some really big cap stocks. Let's do the same thing with Tesla. So Tesla, we'll just take it to the chart here. So Tesla had an expected move of let's see, 51 going into Monday's print. Look, Tesla is not. Tesla was at 676-ish, I believe. Let's see, Monday. Here's 3 days ago. So, excuse me, the high on Monday on 7/26 was 668. Here's Tesla trading at 647. That's clearly not $51 to the downside, certainly not $51 to the upside, and that's what that expected move represents. So when you're looking at the expected move, notice that it says plus or minus. It's that buffer, right? That's just for a couple days. And so like, look at the implied volatility, how high it is compared to the implied volatility here. That's how you know there's a special event going on, like earnings. It's higher implied volatility. You know, it's almost twice the normal implied volatility. And so you want to understand all that. And so, yeah, Tesla's just trading in a range. It's trading in that expected move range. It's down 20 points from Monday. Not the end of the world, but where's the path of least resistance? Kind of hard to tell from this chart, right? It's just range bound. There's really no way to discern what Tesla's going to do here. And that's kind of the point. Like, there's so many bulls for so many different stocks. How about Microsoft? And I love what Satya Nadella is doing at Microsoft. That guy is what an amazing CEO, especially coming after Steve Ballmer, right? Who was not Satya Nadella. Really super awesome chart, right? Still finished the day down, but it was down $3, 3% after hours. Super bullish chart. The expected move on Microsoft going into the print was $9.31. Yeah, they're just bleeding the premium off. The people who win earnings are the people that sell you calls and puts. That's why you want to be a seller of options, especially around this time. You want to be the house. The house wins consistently. That makes you Vegas. Vegas wins consistently. That's why they can continue to build amazing, amazing facilities in Las Vegas, right? Because Vegas wins consistently. Now, I could go through AMD. I could go through Google. We'll do two more here before I do some TNX work with you. So here's Google, right? Google up 83 points, 84 points, 3%. But actually, the move in Google, the expected move in Google was 109.40, 109.40. And so, yeah, it's actually within which was what was expected. And so then let's take it 2 steps further. Let's go to an ATR chart. You're at the third ATR. Yeah, even over here back in April, the third ATR, gentle pullback, third ATR, sharper pullback. After earnings, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trading sessions, right? Now that's over 2 weeks. And then finally you come back to the mean. And look, this is a game of patience. And so I don't want this to be lost on you, but I want to say it really distinctly because I don't think you should ever have to chase. Everything always reverts back to the mean. How patient do you want to be for it? One of my favorite companies in the whole wide world, and I think the CEO was just an amazing human being. Like, we don't do interviews on the radio podcast, Stock Nerds, but if there was ever a chance to talk to Brian Nichols, this guy led Taco Bell through some amazing growth, and then he got recruited to lead Chipotle. One of my favorite companies in the whole wide world. Chipotle has a float of just 29 million shares. That's it. Restoration Hardware has a float of like 21, 25 million shares. These aren't huge floats. These are amazing stocks and amazingly well-run companies. So here, 1, 2, 3, 4, 5, 6 days now after earnings, yeah, if the market starts to correct, what do you think Chipotle is going to do? It's probably going to correct back a little bit. No stock is immune from this. And so when you get a runner, and Chipotle was clearly a runner, they tend to give you 6, 7, maybe in that extreme example with Google, gave you over 2 weeks before it finally pulled back. And it doesn't mean it's a bearish situation. It's just, it's what happens. Look at where the mean is. The mean has severely come up here. Look at that trajectory. To be able to get it down here somewhere in the zone of the mean is a absolute gift. And so doesn't mean it's going to work, doesn't mean it's what you should do. Because again, edification, my friends. But what I'm trying to stress to you is that you don't have to chase. You just don't. You wouldn't even know this. I mean, by looking at these price bars here, it's down 1% today, right? And it really wasn't that bad of a day in the markets. And so you're going to get your opportunity. It's just how are you willing to wait? Like PayPal, PYPL tonight. So PayPal is interesting. So PayPal is down here at 285. And so PayPal did correct down to the mean earlier today. And so where's 285 put it at? Yeah, somewhere down here above below the first ATR. But is that inside or outside? So it went out at 302 and now it's $15, $17 lower. So let's put in here PYPO. So the expected move is 13 points. And so, yeah, a little outside the expected move, but not much. And so you could see here, PayPal, if I can get back to the chart. There we go. Yeah, PayPal, right? Well outside the expected move, right? That's 27 points. Expected move was 13. So you're 280, let's call it 285. So you're 15 points. You're kind of in that zone of the expected move. I don't know what happens tomorrow, but what you're going to hear is down 5%, down 5%. Google today was up 3%. And you really want to know what was expected. And so you get true runners like that Chipotle move when you get, let me put this on an hourly chart because you can see it from here. You get true runners when you exceed the expected move by a certain percentage, okay? And so I want you to understand that. And so everything just has been really trading within the expected move. Like, let's look at AMD real quick because I kind of lost track of AMD today. AMD had an expected move of $5. So you're like, well, Tim, that's $7. Yeah, I mean, it's not the percentage to give it a runner. I've studied this enough to know what can be a runner and what isn't. And right now, this is not the look of a runner, especially by mathematical statistics that I just know from doing this for so long. So hopefully that helps. Now let's transition out of this. Let's take this out of extended price sessions. Let's get this back here and let's talk about TNX. So here, right now, the relationship is that if TNX is up, and that's the 10-year Treasury yield. So if yields are up, meaning the economy is expanding, it's inflationary even, markets are doing okay. And so you can pretty much track this to an S&P chart, to a NASDAQ chart on a lower time frame basis, 15-minute, 5-minute, and you will see. But look at going back to an hourly chart with the fib level, the TNX could not, it cleared this 50% level, right? Went up to 618, markets were good. Markets a little soft, right? Now look, starts up here and now it's just been kind of heading lower here and it can't close the deal. My thought is that if it can't get past this 50% level and it starts and yields start coming off, and right now they're trading at 126. They're trading at 126. They start going lower. That you'll probably most likely see markets in the red, because what happened to the reopening trade? What happened to the expansion? I think that's been an interesting relationship that you can study. Again, we're on an hourly chart here. It's easier to see on an hourly chart, and you can kind of track it with the S&Ps and the NASDAQ. So follow the TNX. Usually it's not the day of a Fed announcement that matters the most. It's the next couple subsequent days. So that's not scare tactics like better watch out tomorrow. It's not what I'm saying at all. I'm saying that the true move isn't typically known until that Thursday or Friday after the Fed chair speaks. So hopefully that all helps. Any questions? Tim at Revere said, any concerns? I want to talk to America's fiduciary, Danny, 855-732-5932. With that, I hope you have a great night, and I will see you at the next update.